Good morning, everyone. I'm Martha Stokes. I'm a chartered market technician. I also want to let you know that I'm a retired buy-side professional. I grew up with the stock market all over the place, and a lot of my family was educators, so I love to educate. And at the age of 9 or 10, I was sitting beside my grandfather watching him do stocks. And by the age of 12, I had started to do some investing. So I have a long history of both teaching and the stock market, which is rare. And I want to share my knowledge and share my expertise with you so that you can become far more successful. I want you to raise your expectations. I want you to do better at your trading, because every time I have a student who succeeds, I have a very proud sense of accomplishment. It is my legacy. So we have a lot of questions about last week's topic, which was about dark pool, buy zones, and SPY and that type of thing. I'm choosing a stock today to discuss that further, and I'm going to go more into explanations of dark pools and how they function, because I realized when I read your questions that you're getting all kinds of misinformation. Since I'm from the buy side and have associations with all kinds of buy side institutions and study them constantly, I have a vast knowledge that apparently is unavailable on the internet. So, first of all, dark pools are buy-side institutions who have the fiduciary responsibility, they're also called fiduciaries, to ensure that the 401ks, IRAs, and all of the pension funds and retirement funds they are overseeing and are fiduciarily responsible for, that they do the best that they possibly can for those pension funds. They are very dedicated to that, but also they make a good deal of money from managing and taking care of the pension funds. They are long-term investors. They are not short-term trading at all, except to adjust inventories at the end of the month, adjust for ETFs when they are changing price values dramatically by the end of the month or even in the middle of the month. And they also do support the market, which causes a huge run up. This is extremely rare, but they do happen when the dark pools, buy side institutions, realize that the market is going down and they are concerned that 401k and RIA holders are going to want to move their money out of the funds that they have them in and into a safe haven. So they have started this back in 2018. And they continue to do this. They support the market. They supported the market through the pandemic. They supported the market through the correction of 2022. And they have recently supported the market as we have tariffs that are scaring people. And they are concerned that they need to have the 401k and IRA and pension fund holders and owners to calm down and not go running for the doors and cause a major collapse, because they will sell the ETFs. ETFs are the most popular investment right now. And if they sell a lot of ETFs suddenly, the market can go down very fast. So they are trying to console and comfort and make sure that the 401k holders and all the other pension funds are secured and understand that they need to hold, as it's a long-term investment. As a long-term investment, they have a completely different perspective than what you think they do. First of all, they set a quantitative analysis on every company to determine where they are in the business cycle, whether their price fundamentally is under or over valued based on fundamentals. If the fundamentals are above price, then they're going to be quietly accumulating. Now, what they don't do is buy giant lots on the public exchanges. You never see them on the public exchanges because they're not there. In 2002, they went to the SEC and said, we can't deal with the penny spread uh, gap ups and all the things that are happening. We need to have our own private venues that are dark and unlit so that we can do our responsibility, our fiduciary responsibility to our investors. And the SEC said yes. Now there are over 50 alternative trading venues. They are also known as dark pools. I call them dark pools. I call buy-side dark pools as well. This is where all the major transactions occur. You can't see it. It's not on your level 2 or any professional screens. You have to see the action within the chart by understanding how they do their slow, steady accumulation or slow, steady rotation, which can eventually cause a top. When they see bargain prices, and they have seen bargain prices now since April, and they have started to slowly, quietly accumulate, you will have a certain pattern in the charts that tell you they're quietly accumulating. There's also these two indicators, which I like. The prior indicator that I was showing last week is a public domain indicator. I also have a proprietary indicator that I wrote and I have used personally for many years, but it is not public, so I cannot publish it for you to see. And that's what I was trying to do last week. I had to choose a public domain to show, and it's not as quietly as detailed as these other indicators are. What we want to see is that dark pools do time weighted at price order flow. The time weighted at price orders are unique to this group of market participants, the buy-side institutions. That means that over time, a certain price range is established. Maybe it's 5-cent spread or 10-cent spread or even a 50 or $1 spread, but it is a high range where they will stop. The TWAP is automated, so it will stop buying, and there's a low where it will start buying. If it falls below the low of the buy zone, the TWAP order, I call the TWAP order range, that's sideways, the buy zone that's going on. So they will buy at that price or lower. If it's below their low of their buy zone, they're going to push the price back into the zone. And we can see that that's what exactly happened here. We had a buy zone in here, and it dropped below the low, and then it came right back up into it. And then we had more smaller funds selling, but they continued to quietly accumulate the stock. And then pro traders do nudges and move it up and run up this way. So we have buy-side institutions slowly triggering on ATS venues that you do not see. They're trying to accumulate millions of shares of a stock at a time, and they do it over several weeks to several months. So they're not going to have a huge surge of volume. They're not going to have a huge spike in price usually, except when it drops below the fundamental values, because they have used quantitative analysis with some AI. Yes, they use that, but they don't use it to trade. No professionals are using AI to trade. So if somebody says they are, they're lying. They are using it to ensure that they can calculate the true fundamental value of this stock. And it dropped below. This is the fundamental value for this stock back at this time. So this was the whole fundamental value. You can see that there's a lot of activity going on in those areas that define the fundamentals. So you can look at a chart when you learn, and you can say, okay, this is the fundamental value, and this is where the highs, this is where the dark pools will stop their accumulation and allow the pro traders to move it up. They do not initiate the moves up. They do their quiet accumulation over time and are buying incrementally. They usually are doing all their transactions on the ATS venues. If they need to go to the public exchanges for liquidity, they will go there, but it's also hidden. Now, the SEC Midas tracks the dark pools all the time, studying to see what goes on. And you can see in the SEC that it's a very low line on their chart, their Midas chart, because they show it. And then you'll have HFTs spiking above that and all of that kind of thing. So when you see huge runs like this going up, this is not dark pools. They have quietly accumulated, and they'll get to a certain point, and you can see that that line pretty much comes across very evenly, and that's when they'll stop. That's the end of their thing. Then they sit back and they allow others to move the stock price up and up and up. Now, retail are the momentum activators. The nudges by the pro traders initiate and inspire HFTs to trigger because they have sufficient volume that it causes the HFTs, the high frequency traders, that gap and run stocks up. This is a nudge. Even though it went down, they nudged it back up here and closed it higher. And then the price starts moving up and gapping due to HFTs at market open, running it up, at market open, running it up. So we have a lot of pro traders in this mix, and the buy-side institutions depend on the professional traders to activate the momentum run up. When the speculation goes into a stock, it is always the retail side and smaller funds. Now, smaller funds contribute a huge amount to the momentum runs up because there's 10 to 15,000 of them, and they're actively trading their clients' long-term investments, which is scary for me. Because the smaller funds really haven't got a clue, and they use a VWAP order. So when you see a lot of high volume and price action that's moving up, it is usually small funds managers doing that activity. So that's what is going on. And you can see that when we spike to the bottom, that is a reversal signal on this chart. And when we spike to the top, if you follow this up, you will see that the line is on this white candle. And when we have this signal that we have spiked to the top of the chart with these two indicators, it means that you, as a swing or day trader, I would prefer you swing trade because you can make a whole lot more money. Yeah, I know day trading sounds like so much fun and it sounds so easy, but it's not. It's really hard and there's so many restrictions. Try swing trading. It's so much easier and it's so much more money. So we have a signal here. So if you see that during the day and it's spiking up during the day, then you can get out before a big gap down or run down on that. That's one of the things that's a great features of these Chaikin oscillators. They're really great and wonderful. And you want a center line oscillator for volume. And you want the money flow to tell you whether money is moving in or out. It was moving out because a lot of smaller funds and retail people were selling their stock. And then all of a sudden we see quiet accumulation going on in here. Quiet accumulation, quiet accumulation. And it ends right about here, right where they would say, okay, that's the high of our range for our quantitative analysis. We're not going to pay a penny more. We're going to let other people drive price up. Dark pools do not move price. They hold it in a steady price range, and they control their entries very carefully with TWAP orders, which are time weighted at price automated orders that they set to accumulate a small amount of stock every day over weeks and months. So it's very different than what you've been told or what I hear from your questions that you've sent in. And I do thank you for sending the questions in because it helps me understand what you need to know that I can share with you my knowledge and help you become consistently successful. You need to trade wisely. You need to raise your expectations of what you can make. And you need to have more education so that you can understand what is really going on in the market rather than what you hear in the chat rooms and that type of thing on news and social media and so on. I'm Martha Stokes, and that's our topic for the day.